Welcome to today's webinar, Agile Not Fragile, Why Cultivating a Partnership Mindset is Key to Bridging the Innovation Gap, sponsored by GPS. My name is Sofia De Francesco and I'm the head of content at DPA. Before we get started, I'd like to go over a few items so you know how to participate in today's webinar. You will have the opportunity to submit text questions to today's speakers by typing your question into the Q&A tab of the control panel. You may send your question at any time during the presentation. We will address them during the Q&A session at the end of today's presentation. If you have any logistical question or any technical issue, feel free to send a message through the chat box to Amy Page from the EPA, who will be on hand to answer any queries. I would now like to introduce Tony Craddock, Director General at the Emerging Payments Association, who will be moderating the webinar today. Over to you, Tony.
Thank you very much indeed, Sophia, and welcome everyone. I've really been looking forward to this webinar, not just because we've got some superb speakers, but also because this topic is really at the heart of what makes payments work. Why cultivating a partnership mindset is the key to bridging the innovation gap. If you like, it's a secret sauce of the companies that lead this industry. And partnering is a form of collaboration. Collaboration is seen as a prerequisite to success. And so today we've set up these great people to share in a conversation with you. We're going to try and be as specific as we can and coming up with specific examples of what works and what doesn't. So you as the listeners can apply the lessons to your own situations. Don't forget, questions are very welcome. There's a Q&A feature just mentioned. So please, this is an interactive thing and we want to get everybody engaged with what's happening. So I'm going to, because not often I would introduce the speakers, but I'm going to actually ask them to introduce themselves because they'll take less time. I can go on about each of them, but I'm going to start with the host and the sponsor of the event, Joanne Dewar, the CEO of GPS. Joanne, please, over to you.
Hi, Tony. Thanks very much for having us all together. So I'm Joanne Dewar. I'm CEO of Global Processing Services. GPS is an issuer processor. So we provide the underlying technology behind a number of fintechs, challenger banks and e-wallet providers across UK, Europe, and increasingly across the rest of the world. We're doing a lot of the heavy lifting, enabling the fintech brands to be able to really focus on delivering the customer service and experience.
Very good, thank you. And Natalie.
You're on mute.
That good old cliche, I'm afraid. You're on mute again, Natalie. There you go.
Sorry. I forgot to, oh, now I'm off video. Oh my goodness. It's all happening. Hello, everybody. Sorry, I'll start again. I'm Natalie Eastman. I'm Chief Operating Officer here at Curve. Curve is a UK headquartered fintech. And we are a over-the-top platform proposition, all your cards in one. And thanks for indulging my background, my fantasy ski chalet, just to lighten things up a bit, as we all should be out, you know.
We should be all out on our skis. We certainly should. Vikesh Patel from Swift.
Hi, yeah, my name is Vikesh Patel. I'm head of the UK and Ireland for Swift. And for those who don't know, Swift is a cooperative. We're a financial messaging company that support the exchange of messages for payments, capital markets, so securities, FX, and provide data out to the community to allow for the exchange of that value to happen.
Super. And so Scott Abrahams from MasterCard.
Is my camera on? I can't see myself now, Tony.
There you go.
I'm here. Hooray. Good morning, everybody. Thank you, Tony, and thank you, Joanne, for the invite. Yeah, my name is Scott Abrahams, SVP of Business Development for UK and Ireland. I suppose there's two roles that bring me to these types of things. One, I'm a member of the advisory board of the EPA, so myself and many colleagues at MasterCard are very engaged with the EPA's mission and its intention, what it's trying to do. And secondly, my work, like any network business, of course, pushes me towards building and maintaining and growing partnerships across the board. And nowhere is that needed more than in one of the roles that I have, which is heading up our fintech practice in London. So Curve is a big customer of ours, as is the likes of Monzo, Starling, Revolut, Tide, Monese. The list goes on. And so it's a real pleasure to be here, Tony, Joanne. I look forward to the conversation.
Thank you, Scott. And finally, Kira from NatWest.
Hi there. So my name is Kira Conway. I'm the head of payments architecture at NatWest. An amazing time to be in payments at NatWest, helping the business really negotiate the disruptive change. I think that's happening all around us, some positive and some negative, and a really exciting time to be part of payments, and especially within NatWest.
Exciting time to be in payments, exciting time to be here, I hope. So let's kick off right away. Collaborating between people and partnering between people who are very similar is relatively easy. But let's start thinking about how incumbents, often the more established, larger companies, and fintechs, who are typically the newer, younger companies, might collaborate and partner effectively. Joanne, why don't you kick off and share an example or two?
Yeah, so absolutely. You're absolutely right that when fintechs working with other fintechs, it's it's a sort of very happy, very fast-paced environment to be working in. And I think whilst incumbents are looking to derive a number of the benefits that they see that the fintechs have managed to achieve in terms of that agility, actually turning that into a reality is a lot harder than it looks. And I'm sure Kira's about to talk about this in more detail, but certainly from the sort of the fintech technology providers perspective, I think the first point becomes there's a significant knowledge gap from the incumbent's perspective, often in terms of just what's out there that could support. That there are kind of third-party solutions that a number of the fintechs that are out there, you think, well, how did Monzo or Starling or Revolut build all of the things that they've built in such short order? Well, actually, a lot of it is due to leveraging the capabilities of others. But then in terms of building that knowledge, it takes a lot of time and energy to build that put that into the right hands, because very much what you find is the initial interactions tend to be via an intermediary. And often you don't actually know who the incumbent is that sat behind those intermediary conversations. Then there's a whole procurement process that you're not used to in a fintech partnership world, where things like what your balance sheet looks like makes a material difference as to whether you're considered sort of worthy as a partner. The legal process can really suck you dry in terms of the number of iterations and the scale of the different styles of contract, and equally just the exploratory conversations. I mean, we've sometimes been in scenarios where we've had 20, 30 conversations with up to 50 different people, whilst it's still in an assessment mode, and that kind of activity can really, if you're wanting to work with a fintech that hasn't got the thousands of people, that can really take a lot of resource away from what's more immediately revenue generating from the fintech perspective. So
absolutely.
There's some thoughts that I'm sure others.
Yeah, no, absolutely. Time consuming and costly potentially. So Kira, how do you think the more established players can engage effectively with fintechs?
And I think I echo this point. I think the two entities are extraordinarily complementary. There is the speed and agility lens from a fintech perspective, which actually most start as software houses. So they are really focused on product, really focused on that disruption of the market. When we pair that with the, I suppose, the IP, the regulatory, the compliance knowledge, the really broader awareness of the market and broader awareness of really what it means to be in payments, when we partner that together, that is where those joint offerings and joint partnerships become really powerful. But also echo the point that in terms of, I suppose, incumbents or big banks, to use a kind of a glib phrase, but in terms of some of the larger players in the market, what has traditionally happened is that any time that we want to engage with a third party, to Joanne's point, we go out to market, we engage in an RFP process, it is lengthy, it is weighty, and we are, I suppose, conceptually looking for something that is tried, tested, operates at scale, operates at volume, and has a track record of X number of years. So there's a huge mindset shift that is happening and continues and has to happen within some of the incumbents in terms of actually looking for vehicles, looking for mechanisms, looking at even those existing RFI and RFP processes in terms of how they partner and how they make those relationships meaningful. I think numerous, for anyone who's listening, who's been part of RFI and RFP processes over the last number of years, there's a lot of fintechs who will have entered into that process that weren't understood by the bank RFP process. So it's really key that we find the right vehicles and we find the right way to enter in those partnerships so that it doesn't become either prohibitive and so we don't lose opportunities.
Yeah, it's almost as if you've got to kind of change the DNA in a way, haven't you? Kind of some of the fundamental building blocks. And of course, I look at an organization like Swift, and 10,000 members, been around a little while, international. You must have your own way of doing things. What's the Swift approach to innovation and collaboration when you've got from the international perspective, Vikesh?
Yeah, and thanks, Tony. And I think I'd probably pick up from what Kira just said, and knowing where organizations who are collaborating add value is always important. It's always important at the outset and through the journey, and trying to have some clear space between the skills, experience and value that each organization brings is also important to stop potentially kind of having to re-engineer or rethink processes or philosophies that may be common across both. So that's just a build out from what Kira was saying. But looking at Swift, we are a member-owned cooperative. Innovation and collaboration is very much in the heart of what we've been doing for 40 years. And our experience and our philosophy is pretty simple. Then I'll kind of move to maybe give a couple of examples of what that means in practice. But we firmly believe in open ecosystems. So how can partners and collaborators enrich each other's business offerings? We firmly believe in purpose-led, responsible innovation. There needs to be a clear objective to what you're doing. There needs to be a recognition of the environment in which you work, and a recognition and a real understanding that in some areas you just don't want to take risk, and in some areas you can move more quickly in an agile sprint-based environment, and in other areas, be that security or whatever that may be, you do want to have a more kind of slower process, because that's the right way to kind of build out the innovation sprints. So, that's very much at the heart of what we do. We look and seek for opportunities with the industry to work, and, giving a couple of recent examples of where we've seen that come to market quickly and quite powerfully. So the first one is Swift GPI. So, we worked with financial institutions about 3-4 years ago to introduce track and trace for payments, but much more than track and trace, transparency around fees, predictability around kind of when money would move and be credited, and also through the industry tightened up some of the SLAs linked to those payments. And that's been a pretty transformative initiative from a customer experience perspective, but also bringing kind of, being for payments to be as quick as the value of the goods and services that they're following. More recently, we're working in kind of with MAS and the BIS for the upcoming ISO 20022 kind of hackathons, and we're working with Suede, and here we're looking at liquidity reporting. And here at the outset, working with Suede Labs, we had to work out, going back to what I said, what is each organization's strength? And for Swift, we knew that we had the network reach, the security, we had a proven track record of being able to provide intelligent data-led solutions. And for Suede, they had cutting edge technology, innovative software, the ability to automate reporting, and bringing those two things together with a commonality in purpose and mission, complementary capabilities, we were able and are able to kind of, bring out some pretty cool things and pretty quickly in a very agile way. There's these sprints are quick. So hopefully those are a couple of examples that kind of bring that philosophy to life.
But that's brilliant. Those are real world examples of stuff, and I love in particular this understanding each other's strengths and making sure that you get to know each other well enough so that you don't try and do the same thing, bring the same things to the partnership. You bring complementary things and that play to your respective strengths. I suppose that's kind of, in a way, it's like so many philosophical statements. It's kind of, it sounds obvious, but it's so rarely deployed at the outset, and it's a great idea to do that. So thank you. And of course, the strengths of Curve and the strengths of MasterCard are different, but you two collaborate practically day in, day out at all levels. Scott and Natalie, why don't you share a little bit about how it works in terms of partnering between your two organizations?
Yeah, I mean, I would like to talk about, of course, MasterCard and Curve's relationship, but also feeding off of some of the things that Kira and Vikesh just talked about on adding value. I want to talk about us as a fintech, a smaller fintech, scaling fintech, I guess, and how we've been working with others as well and bringing some added value. But it's no secret that we've often Scott and I have talked about the wonderful relationship, at least from Curve's perspective, we have with MasterCard. MasterCard, I mean, the value we've added to MasterCard is, well, Scott will talk about it, but if partnering with fintechs is a deliberate strategy from MasterCard's point of view, which made them very open to doing new things. And one of the things that Curve did in the beginning days was define new rules for the new model that we had, which was a decoupled debit program. MasterCard was very, very happy to look at how their rules were in place and how they could accommodate this new product construct, and continue to be open as we go into new markets, by the way, to talk to us about this. And that's for me, so the beginning, just that openness to, let's see how we could do something different. Yes, let's break those, let's break through the existing models that are there. I think that was really super important. And last year, Scott and I talked about the amazing partnership we had, but Joanne and GPS were equally involved as Wirecard came down. And Curve got stuck with basically our business was shut down by the FCA, and we had to work over a weekend to bring our business back up. And from GPS, Joanne, I expect it because she's just as quick and nimble as we are. And I liked that you started with the fintech. We're really quick to try something out, and oops, if it doesn't work, we'll fix it and we'll move on. And we do that often with GPS. But MasterCard was there equally with us to push through existing processes, get things fast tracked for us so that we could get up and running in over a weekend. And that was for us really amazing. But just before I go and, let Scott talk, I can't believe I'm keeping Scott quiet, but
that's rare.
Yeah, rare. But it's also, we are a small fintech that is partnering with very large company, MasterCard being one of them, but Samsung being another. Yeah. I mean, you know, and so we're partnering with Samsung for the Samsung Pay card powered by Curve in the UK. Samsung Pay and Samsung Pay had a problem. We came and were able to solve it, which was that they didn't have 100% acceptance of all banks onto the Samsung Pay platform. And they wanted something that, you know, would be innovative in the market and drive traffic also to Samsung.com. And that's where our solution made sense for Samsung as a kind of platform, open banking type platform for them, and gave themselves 100% acceptance. Well, I'll tell you what, a very large company is able to take a chance on a smaller fintech because we solved a problem for them. So they are very willing to invest. And so, you know, some of the things that, Kira, you were talking about in terms of, you know, we need to make sure that, you know, they've been a fintech's been around for a while, that they can scale, and there's an RFP process. But all of those things are true. But if there's something being brought back to this large company, it's my experience that they're going to take a chance. We have lots of other very, very large organizations talking to us as well. And you know, that's where it really starts to happen. That's where the magic happens, is when you're fixing a problem together and it works both sides.
Exactly. And just to add to that, you know, there's been so many rich examples as to where we've sought to solve sort of problems together, or, you know, take advantage of opportunities as well. It's not just, you know, in the negative sense, but, you know, that ability to rapidly respond and innovate together and be able to take advantage of the growth opportunities, you know, that you know, it's a prime example, the sort of the three-way relationship of how it works with MasterCard and Curve. And you know, I'm really proud to be able to share how that works with the wider world.
And by the way, what's lovely about this, Scott, is it's not just about it makes commercial opportunities realized. It actually feels good too to work like this.
Oh.
Can I go now, Natalie? I'm joking. I'm joking.
I don't know how I managed to keep you quiet.
There's a mute button. No, that was brilliant, Natalie. Thank you. And yeah, I won't go over the ground of what occurred last year, apart from to say that we as MasterCard were very proud of many of the partnerships that we'd formed that enabled us to get through those situations that we had last year. Which was, you know, that weekend was of course huge, but there was a lot more to it than just that weekend as we worked through that last year. I'll talk a bit later. You know, our job, MasterCard's job, the people who work for me and others, it's clearly our job is to understand the needs, the aims, the desires of our customers. But we'll talk about that a little later. What I would say about the way that Curve operates is that they also understand that it's important to get to know us a bit as well. And that to some extent sets them apart. And, you know, Natalie and I have worked together in the past, and Edo has worked with Natalie, that, you know, that there's a number of personal relationships already built there. But from Shaka, the CEO, and down, their approach has always been to take the time and effort to understand what the needs of MasterCard, the desires, the aims, the strategic direction of MasterCard as well. So at least then you give yourself an option of potentially aligning with that. You don't have to, but perhaps you would in certain areas. And that, I think, is what to some extent sets Curve apart, is that they make that effort daily. And we see it with many of our customers, but particularly as our customers go from smaller startups into more established businesses with more people and more pressure, probably actually, in terms of achieving more and more. You know, we want to see those partners go. You know, we want to go through those growing pains with them, if you like. But that's the thing that really set us apart, I think, last year. The other thing as well, I would say, on both sides, is that there's a huge amount of willingness. I've got people who work for me who feel as much that they work for Curve as they work for MasterCard. And I would also say, I wouldn't just call Curve out there. There is many of our customers people who work for me feel that they work for those customers as much as they work for MasterCard. And that's what sets it apart, Tony, I would say.
So to what extent is this counter again? To what extent does this counter against the way in which many companies are set up at the moment, which is they have their salespeople and have their buying people, and the salespeople are out there selling and they're making a pitch, and the buying people are being the ones who are checking, evaluating delivery against selection criteria in a mechanic in one way. So that's traditional vendor sales, and there's lots of our members who have got people in their teams that are out there selling stuff, and that's great, and lots of people out there buying stuff. To what extent do we have to overcome that and do things in a different way? Because the sort of language you're talking about, mutual understanding, playing to strengths, openness, alignment, that's not traditional let's go and flog some stuff mindset, is it?
I think oh, sorry.
No,
Here
you
we
go. No, so and this is absolutely the heart of it, is how do we change that sort of buyer and seller relationship? So in NatWest, to really maintain that focus and strategic focus on partnership, we've set up a new team with that as a strategic remit. The reality is that for anyone of NatWest size, and for most of the top 5, it's not possible to seek to be efficient and number one and best in class over the thousands of processes and products that we've got. So I think that's absolutely it. How do we take it out of that sell and buy type relationship? And I think this kind of echoes back and harks back to that RFP and traditional models of engagement are a massive enemy for us partnering effectively. But I think to your previous point as well, we are doing this because it feels good. There is so much about these partnerships that feels amazing. It challenges our own mindsets, it challenges our own cognitive dissonance, and really brings fresh eyes and fresh perspectives to old problems. So it feels good. It's like an injection in the arm of energy. It's new people, it's new energy, it's something different in your midst. So there are so many commercial reasons to do this. There are so many things that we need to change as an industry in terms of getting away from buying and selling relationships, in terms of moving into that partnership model and really culturally being set up for a partnership model. But also at a very basic level, it feels really good.
Yeah, isn't that cool? Very cool. So, but the thing is that not. Sorry, Joe, do you want to add to that?
Yeah, I couldn't agree more, and it's so refreshing hearing that from someone like Kira in her position. I think we often see in the RFP process, it's all about how many days will it take to launch. I'm sure from a scheme perspective, it's like, what incentive can you give us? And it's focused on completely the wrong things. It needs to be on your customer NPS, the stickiness of your customers. I mean, we've got incredibly low attrition. We have a strategic council that Curve sit on along with a number of our customers and partners. That's how we really share the sort of the inner workings and roadmaps and things of our organization, and sort of very transparent as to what's going on. That's the proper partnership, and it doesn't come across in the RFP questions to be able to get across, but that's where the value really is when push comes to shove.
Can I add to that? It's
yeah, sure.
What we're starting to talk about here is emotion, right? It's the emotion of wanting to do well, being invested personally. I mean, I know that within MasterCard and GPS, some of the people who work with us on a day-to-day basis are Curve customers. So they're invested personally into making it work. And then when we fall into a problem, they work out of hours over weekends because they know how important it is and they want things to be back up and running. And we are, and the other emotion that we like to try, and sometimes we forget, but we mostly try to always remember to express gratitude, because this is an ecosystem. Payments is an ecosystem. Nobody goes it alone. It is, and you have to always be thankful for those partners, because without them, you're not doing it by yourself. So that's what we try. That's a philosophy we try to practice.
Very nice, very nice. Vikesh, does that apply internationally as well?
Yeah, no, I think it does. And I mean, I I think what the my panelists have said is really interesting. Just to add maybe another dimension to that, you know, I think a lot of people talk about co-opetition nowadays. So the idea that, you know, you can collaborate with someone who may be a competitor. So here we've talked about fintechs and incumbents, but equally, you know, finding the common ground between, you know, organizations or groups of people that maybe feel that they are going at it, competing day in, day out for the good of a common purpose is possible. And there's a lot of value to be unlocked from that too, you know, as well as kind of, you know, breaking new grounds with fintechs and incumbents. You know, there's a lot of good things happening in the market, you know, when you can come into that kind of, you know, an organization or a partnership can both collaborate and compete at the same time.
Yeah, it's wonderful, isn't it? 2 + 2 = 5 or 6 or whatever. But Scott, we're not just talking about the private sector here, are we? Can you comment on your experience of working with with public sector organizations?
Well, I think first of all, I would say, Tony, that the same rules apply to some extent, right? It's all about people as far as I can tell, and the way I think about what my job and people who work around me in MasterCard, you know, we are almost adapters between our customers and the rest of MasterCard, and there's many reasons, and maybe we'll get into that a little bit later, that there's many areas where us being slow and potentially, you know, it's quite important to stick to a set of norms is very important for the way the network works overall. So actually, you know, when it comes to the public sector, and we're working with many companies at the moment who perhaps to at least some extent have the public sector as a potential area for customers. You know, I think sometimes it's important to not get too far ahead of yourself and think that they're very different and they've got to do things in different ways. It's all about people and building relationships. The challenge sometimes with the public sector is people change jobs a lot. And actually, in our experience, of course, it's more, to some extent, it's more important to know the civil servants involved than the politicians, perhaps to some extent, purely because they churn. And I think back to some of the things, I won't go into detail now, but some of the things and discussions we were in discussion with central government around, for instance, back in the summer, around potentially, you know, helping inject more finances into the country. And indeed, we did something eventually on the island of Jersey and Guernsey, where we used our products to disperse £30, I think £50 each to 100,000 people on the island of Jersey and Guernsey to, you know, to get people out there and spending a little bit. But that was all with the civil servants as much as the politicians. So building that relationship is important. Understanding that there's a big prize at the end of it, but that the sales cycle will inevitably be slower and could, for no reason at all, completely disappear overnight. I think that's the other challenge. You know, it's a policy is very easy to change in one way or the other. I think of all of the different discussions that were ongoing around, say, the Eat Out to Help Out scheme last summer, for instance, right? And so I think that the prize is big, but the risks are also quite big, because sometimes it changes with the wind of policy rather than anything else. And I think we as MasterCard can afford to stay the course, if you like. And I don't mean that in a disparaging way to smaller companies. We can afford to, you know, we were talking about sales cycles of debit transactions, Tony, a little earlier, right? We can afford to stay the course there. Perhaps others can't, but it's worth, and I think actually as we look to come out of the pandemic and hopefully into you know a brighter summer this year, there will be a huge amount of public sector desire and demand for new things to help the country get back on its feet.
Well, do you know, I really hope so, because over the years, and I've been playing this game for 15, 17, 18 years or something, we on occasions have embarked on trying to help the public sector to take on essentially some of the new and exciting things happening in the fintech and paytech community, and be the bridge to help to facilitate those conversations. And it's hugely difficult and very frustrating. And in the end, it's kind of, well, hold on a minute. This is potentially a flaw in our economic and social system, because what's happening is the private sector is benefiting phenomenally from all this amazing new tech and capability and intellectual property. And the public sector just can't get it.
Yeah, I'd say
it's so hard to get into it.
you're right. I'd just say two things on that. One, I don't want anybody to misconstrue my comments as anything necessarily too political. It's just the way things are, right? But I think that's where a partner like MasterCard can help, because we can afford to stay the course and follow those things through. And you know, when I look at some of the opportunities we brought to some of our partners last year, they've been really quite exciting actually overall. So you know, I do think that it's worth using companies such as MasterCard to try and bridge that gap between the public sector and new startups and fintechs, because you know, also that the public sector will feel by their nature a bit more comfortable dealing with us, right, as well. That's the other thing to bear in mind. If our brand is on the product, there is a level of, and I don't mean that in a disparaging way to any other customer, by the way, it's just a fact, basically. That's something worth bearing in mind as well.
Yeah, you're absolutely. Sorry, you're absolutely right, Scott. That, you know, I know whatever department it is in government, they're not going to pick up the phone to GPS and say, "Hey, can you help us with a solution here?" They will speak to MasterCard. There's a really important role as an intermediary, and I think sort of part of the solution has to be, and we've seen some examples of where it's worked well, is to just get enough commitment to actually do some form of proof of concept or MVP. Because an MVP can, you know, it can be commercial in its own right. So from a fintech's perspective, it's not just a talking shop and a waste of time. You know, it's not looking to put a solution in place for 20 million cardholders on day one. But if it's for a test bed of 10,000, 50,000, then it's worth doing. And then you can let the product and solution speak for itself.
Kira, have you got some experience of working in public sector? And Vikesh, do you have some experience of public sector work that you'd like to share?
And I think for me, I suppose I'm interpreting public sector slightly differently. So in terms of payments is part of the fabric of society. And as a result of that, is part of the fabric of government, is part of the fabric of regulation, is part of the fabric of really numerous industry bodies. And the same way that from an NatWest perspective, we have a commitment on those strategic partnerships, I think we also need to ensure that whether it's as NatWest, whether it is as a function of government, whether it is as a function of governance, I think we need to almost sponsor that fintech voice being heard at some of those layers and some of those levels, to really look at how we weave in innovation into the fabric of society. Because really by inference, if payments is a part of the fabric of society, if we can partner that with innovation and innovation how we do payments as a society and not just as competitors and as banks and as in competition with one another. At the end of the day, payments is not a market with elastic supply. There is a huge part of what we do that is part of a societal good. And it would be, I think, naive of us all to ignore the role that we all play from an industry perspective and from a society perspective. But actually, I think there is a duty on us all to really bring that fintech voice and that innovative voice into some of those layers of government and governance around the payments industry.
Yes.
Yeah, and Tony, just to maybe pick up from what Kira was saying there, you know, maybe a slightly different but linked perspective. You know, all of us spend a large part of our time talking about technology, APIs, whatever it may be, digital transformation, innovation. And even we struggle to keep up with the pace of change. Now, my conversations recently with the public sector, there's a real willingness to transform, but there's also a journey to understand what some of the language, technology boundaries and frontiers could offer them. You know, when you're, you know, if I look at potentially, let's say HMRC from a tax perspective, they're dealing with the collection of billions of tax receipts daily or yearly. And I'm sure they want to innovate. Some of the conversations absolutely I've had with them are front and center about innovation. But again, the same things we talked about there, you know, what is, you know, where could they innovate? What does that look like? How would they put some of that stuff in? what is the risk boundaries for some of these discussions, and more basically, where is the edge of technology adoption right now? So, you know, I don't think it's a willingness thing. I think there's also, as we all have, a understanding of what's out there, where a problem is, and what could be brought to light to solve the problem.
And applying that in the public sector is our duty, even if it's a little bit longer. It seems to be a little bit harder to do. Yeah, no, very, very nicely said. And
I mean,
thank you.
I would like to add something because there, you know, in another conversation with some other fintechs, we were talking about how I think one of the things that the UK government has been doing well is going out into the fintech world and looking for solutions. And when I say fintech, it's, you know, all of the tech, I guess, you know, not just a small, and looking for solutions when there are problems, and that there have been repeat examples of this happening. You know, one that happened last year, right when the pandemic came down and we went into lockdown #1. Remember, back then we were all very scared. We had a lot of vulnerable people who were not leaving their house. How do you take care of those vulnerable people? Well, the government came out to our community through MasterCard, but, you know, came out to our community to ask us, how do you find, you know, do you have a solution? Do you think you can do something where we could, you know, because remember we were asking for volunteers to shop for vulnerable people, but how do you give them the money to go to the shop and all of that stuff? And they came out to us looking for solutions. And, you know, just from a Curve perspective, we felt that call of duty. We felt very inspired by that mission, and, you know, we're very mission led. And, you know, for 48 hours, our designers were coming up with what could we do that could be a simple solution? What could we offer up to the UK government to, you know, solve for this problem? I mean, we didn't, in the end, you know, our solution didn't get picked, but I know Starling did the same. I know PPS did the same, you know, and everybody got very motivated to do that. And I do think that that's something that's really good, that we should continue to go out and look for solutions when there are problems to the entire ecosystem, and, you know, not try to come up with it, but ask us to come up with this.
Yes. It's really nice. And I'd like to broaden the conversation a little bit from the UK ecosystem to the global one. GPS, who's hosting and sponsoring this event, is also the benefactor behind our Project International Trade work. And I know, Joanne, you're doing a lot of work in Asia, North America, other parts of Middle East and North Africa. You have a global perspective. How do these same principles of partnership working apply internationally? Because to some extent, the definition, the basic definition of how people do business is different in different parts of the world.
So I'd say there are some aspects that are exactly the same, and there are some aspects very different. So if we start with the similarities, the opportunity in terms of the move away from cash, the digitization, the adoption of smartphones, the expectation that you can do everything on your mobile app. You know, all of that is happening in every single country at the same time. The desire for the traditional banks to be able to reflect on the, you know, be able to create digital offerings is very much there. The aspect that is so different is the regulatory aspects. So we have been extraordinarily fortunate in the UK in how supportive the FCA and PRA have been, and it's, you know, a very large factor as to why the UK is effectively been streets ahead of so many other countries. We're seeing different you know, regulators open up, and it's almost, you know, in an order. You know, there's been MAS in Singapore and APRA in Australia and HKMA, and there's these new digital, and the role is going on in terms of the opportunities for new digital bank licenses. That is, but there are very different approaches being taken in terms of the regulatory capital requirements, which then, you know, by definition, can you know, stifle the opportunity for, you know, brand new fintechs to get up and running. Because if you've got, you know, a hundreds of millions capital requirement, then you've got some seed round you've got to do in order to be able to get up and running. So I'd say the regulatory aspect is the most different, and the desire from the consumer is the most similar, and how we bridge that gap is something that's really interesting.
Isn't that fascinating? So consumers have problems that we can help solve. We've got to help the regulators to understand how we can help to do that. And Natalie, of course, you're just moving to the US, aren't you?
Yes, we are.
So,
Yeah.
So that's a different world. We know that the way in which I've been hearing some stories recently about the difference in the fundamental payments architecture, and Kira, you might have a comment on this as well. How different fundamentally the industry is over there, but also culturally. People do business in different ways over there, don't they?
Yeah. Well, so first of all, we're super excited. We think our proposition, all your cards in one, will work very well in the US because Americans like their cards. They like their loyalty. They now have the loyalty cards on key rings. They're and I mean, my mom walks around with her loyalty card key ring that she's popping out, and so yeah, we think the proposition will work really well. But again, with MasterCard, we are defining a new product proposition so that we're really meeting those needs, and also going in with Curve Credit, which that's also something that really resonates in the US. US consumers are very comfortable with that. Yes, it's very different. Yes, there have been neobanks, but we're not a bank. So there have been neobanks from Europe that have tried to go in there, and it is tough. But there's already a lot of banking being done. So we're the platform. So we think that we have a strong proposition. But yes, it's different. It's challenging. Obviously, I'm American, French American, but American as well. So it's something that I'm really excited to go back. We have an office in Brooklyn, and that's where I grew up, was in New York. So it's really exciting to be going back and bringing.
So the real reason that Curve's going to America is you want to go home for a bit.
I don't mind being in New York once in a while, but no, I mean, and obviously the proposition just really, really works there. So there's already quite a bit of a fanfare and excitement as we are building a wait list, and that's been really exciting. So
Scott, you told me just now that the US was actually, North America was actually now second in the world.
We're going to make it bigger.
I think that there's and I think that the biggest challenge, one of the biggest challenges, particularly when you're a company the size of MasterCard with a reach that MasterCard has in, I think our CEO told me only last week that we're operating in more countries than are recognized by the UN, I think, at the moment, or something crazy like that. Of course we are. We open our first office on Mars soon or something. But I think what I would say is, and one of the things that we're always trying to get better at, and I think we're making a good job of this, but we have to get better, is providing a consistent approach and service on behalf of MasterCard anywhere in the world. So when I think of Joanne's business, I talk that they do a lot of stuff out in Singapore. I have great colleagues out in Singapore. I speak to them quite a lot. You'll know some of those people, Joanne, and it's the same with Curve and what they're looking to do in North America. One of the challenges, I think one of the most exciting things about working in this industry, and it's something we've been talking about a lot of the EPAs, many of the customers I look after in London, they think of their marketplace as a starting point as the world, right? They don't, there's stepping off points, of course, et cetera, but many of them, how exciting it is to have many companies with such global aspirations. And my job when I think about building partnerships, is to be as consistent as we can on behalf of MasterCard wherever those customers are. Joanne's absolutely right. There's lots of regulation. The business culture is different. Entering Japan, say, is slightly different to entering the UK or the EU, for instance, for many different things. And so, but it's control the controllables time. I do have an element of control in terms of how MasterCard approach those entrants in different parts of the world. And that, I think, is really important as we look to partner and grow our business in the UK, because, the growth for most of our customers here isn't going to come from the UK. Arguably, it's not even going to come from the rest of the EU 27. It will be wider than that. And one of our big areas of focus is to deliver something that's consistent around the world.
So again, global organization, Vikesh, there's you've proven the model, it works. How do you overcome the cultural boundaries? And one of the things I wanted to move the conversation on towards is this we talked about regulation earlier on. I'd love to hear a little bit about other types of rules that exist. And I know within the Swift camp and MasterCard has its rule book, and NatWest will have its policies and practices. What are the way in which you can use rules or standards to help make collaboration possible rather than to prevent it? Because there's a temptation to think rules will stop rather than enable.
Yeah, so I think on the first part of the question, Tony, in terms of culturally what happens, we operate, globally. And I think, just to build on what the panelists have said, I think it's always important to communicate. It's always important to stay focused and true to what you're trying to deliver. I think it's always important to upfront think about how you break the delivery into sprints and how those sprints work and which bits can go quicker. And it's always important to try and continually check in with whoever your end client is, your customer, right? If you're improving the customer experience, bringing a new product or service to market, genuinely kind of push that in and kind of move with the customers or your end client. So on the international side, it's a really good question. And as you were asking it, my mind was thinking about tennis, right? And anyone who plays tennis, you need to have a base level of understanding of the rules of tennis. You need to know where you serve. You need to know, which part of the court you play certain shots from. You want to then be able to adapt and play your game accordingly. And once you have a base level of understanding of the game and of your skills and attributes, you can start to think about, cross-court backhand shots if you want, one-handed shots that are very Federer-esque. But the reason I talk about that is standards, or more at a higher level, it's more than standards. It's anything that allows you to leverage the benefit of known processes and practices. So standards absolutely are a key part of that. And Swift for many years, decades, have been working on standards. The industry has a huge number of ISO 20022 migrations coming in the months ahead. But actually, when we look at things like SLAs or rule books or commitments we make as an industry to do something, and how that can then drive efficiency and innovation into back office applications, front end GUIs, is pretty powerful what you can see. And when we think about what Swift now is trying to embark with the community for the next, period, our mission is, and our strategy is to have instant frictionless transactions account to account anywhere in the world. Now, to make that real, that's over 4 billion accounts worldwide on the Swift platform. And knowing the rules, knowing, where SLAs work, where we want to interoperate and should interoperate with other partners and platforms, where we should enrich other people's offerings and vice versa, enrich our offerings, is fundamental to all of that. So yeah, when I think about rules, it's both standards, hard things that have to happen, but also things like SLAs, market practice guidelines that can be as powerful so that everyone can pick up and know what they're doing and innovate at pace and scale around a common attribute.
Yeah, and you know what? We all need rules. We all need to know that the way in which you get onto a Zoom call is you attend on time. We all know that generally it's an appropriate thing to wear clothes when you're on a Zoom call. There's certain rules and guidelines that make it work.
Waist up, Tony.
Yeah, that's true. So,
yeah, I think just to add to that, in terms of, as for us as a business, as we've scaled ourselves and as we're looking through to the future, I think that the more different customers you have on your platform, actually, the more commonality and rules you have to ensure that you have in place for the common good. and to be able to support that ongoing growth. For example, you can't have 50 different frameworks for SLAs because it becomes impossible to then maintain. And I think one of the challenges for scaling companies, because the likes of MasterCard and NatWest will have had this all the way through, but for an organization, for ourselves, where we've put sort of agility at the center, actually you have to let go of a bit of that agility in order to be able to have some of those standards going forwards. And actually, but you don't want to lose it altogether. So finding the right balance is super important. And as an example, when we make releases, changes to our platform, we're not doing a release, any change bespoke for a particular customer. So if we're adding a field to a report or that kind of thing, it's available for everybody. Now we want to make that change available as quickly as we can. And sometimes it might be to be able to solve something quickly for Curve or for another customer. But other customers will have put an SLA in place to say, and this happens particularly with larger organizations, well, if you're going to put a change in, you have to give us a minimum of 3 weeks or a month's notice. So then that sort of slows down our ability to change.
I'm debating.
Sorry?
I'm debating whether or not to be a little bit controversial here. So, and I think that Tony's going to smile big and say, "Go ahead, go do it."
Yeah, go for it. Go for it. And then but I also want to bring Kira in for a minute.
Yeah, and I think this will actually, Joanne. I 100% agree with what you're saying, and also, know that the spirit in which you do it, because you're quickly growing. You're growing at massive scale, fintech, and But I would say I understand, and I want those rules and standards to be in place, particularly standards and SLAs, so that you know how the game's being played.
Yep.
Where I want to be controversial here is, though, there's a fine line, and sometimes rules can be used to hide behind as well.
Mm.
And that's where we need to be really careful. Like, sometimes incumbents may say, well, that's the rule. And that can be detrimental to changing the way we work, because, maybe the rule's not fit for purpose anymore.
So NatWest, let's talk a bit about that from your point of view.
Yeah, so I think, and I'll move on to kind of globalization, but I think in terms of the rules, I'll probably start with globalization. So in terms of, I suppose, again, going back to that point around buying and selling and the commercial mindset, I think what we also need to apply is really that society or societal type mindset to globalization. So everybody has their own rules, but there is now a growing imperative for globalization, for borderless, for a real feeling of one world, all talking the same language. And I mean that from a payments tech perspective. So interoperability is a massive theme, which actually we need to look at how we influence, how we drive, and again, to my previous point, how we get stronger voices of innovation into all of those layers of government regulation, of industry at large. But I think rather than looking, I suppose, as conquering the next country as a commercial relationship, I think we all operate in the payment space have a duty to kind of influence what we can within that fabric of the rules, within the fabric of how it is operating. We will have all seen the numerous use cases, take FedCoin for an example, but the number of use cases that are now out there looking at how we can explore digital fiat currencies. Digital fiat currencies in their very essence demand interoperability. So this theme will grow, and I think we have a duty as an industry to look at how we support that. I think moving away again from that quite myopic buy-sell lens in payment, there is also the duty of care lens, or actually our role as players in the payment space in the fabric of society and in payments as a function of society.
Yeah, very, very good.
Sorry, Tony, just
sure.
very briefly. Sorry, just to pick up on what Natalie said, and I think it's a point really well made, right? So, a perspective on this. So, staying with the tennis analogy, if I know the rule is the ball needs to stay within the court or it needs to be on the line, right? I can choose to play a forehand or a backhand as long as it stays within the line. So she's absolutely right. There is a gray area, and we should continually challenge the status quo to be able to move forward. But for example, API technology, if someone's initiating a payment or whatever the business function is, you'd want to know it's built on, let's say, 20022 data dictionaries, and that the way you construct it and test it in, let's just say JSON, and the tooling you need and the sandboxes you need, you go through that process, and that through that there are some rules and some validations, etc. But in doing that, when you come to market, you'll have something, a product or service using APIs that's going to work for across a network. Yeah. So she makes a good point. What I would say is, for me, the perspective is it's kind of knowing the rule, but the choice is how you then innovate to work within the game.
Yeah, and also choosing the game. So if you don't want to be kept within those tram lines on the tennis court, then you can play a different game with a bigger ball, and it's called a football pitch, just a different pitch. So I'm with you entirely, Vikesh. So I want to go, and we've got some great questions that are coming through, and I want to go to those in a minute. But I want us to just talk a little bit about the incredible adaptation of our industry over the last 12 months. The fact that following our announcements from the Prime Minister this week, and great work being done on vaccinations, it looks like there is a light at the end of a tunnel, and it's going to take us into the bright sunlit uplands of summer, we hope. And I've been saying to myself, the EPA is going to have the best, biggest, most brash and wonderful summer party in July ever. And I reckon we're going to have 10,000 people attending. But it's exciting to look forward to that. So, Scott, maybe I can call on you for this one. When we think of partnering specifically, I think some things maybe have happened this year that have made partnering, A, more important, and B, easier. What are the things we want to keep hold of? What do we maybe want to do differently? And what do we maybe want to revert back to in terms of the pre-COVID world?
I mean, I think, let me answer that. I would just say one other thing. I think Natalie's point on rules is well made. I do think sometimes that, it's easy to hide behind them to some extent. In saying that, the whole reason businesses such as ourselves and Visa and Amex have been successfully is delivering a brand promise at 45 million, 50 million places around the world every second of every day. And that's why all these businesses want to deal with us. If we weren't able to do that, we wouldn't be able to win the business we have. And so, again, my team, we're adapters. We have to bridge that gap between where we're truly delivering that and it's at risk, and where it's not and it's being used as an excuse. I think it's a really good point Natalie made. But we have to also respect that there are things there that if we didn't have them, just like in Vikesh's business, nobody would want to work with us. If you went to Brazil and the cards worked entirely differently, you wouldn't want to work with us, you work with somebody else. Yeah. So there's that balance to be struck. In terms of your question, it's a big debate happening internally in our company now, and a debate quite literally about real estate, for instance, as much as anything else, right? And how I think there will be a slow, cautious return to work. I'm not talking on behalf of MasterCard now, just my own opinion of what will happen potentially in London. But I also think, though, and many people who work for me are making the point that there's a lot of things that either from a work perspective, from a partnering perspective, they want to hold on to, and they've surprised themselves at how much has been able to get done in this remote way. If I look at our business, we've never been busier. We've never done more deals. We never have a bigger pipeline. And from our perspective, I look at the next 12 to 18 months, I'm talking fintech now, and I see more business and opportunity than I've ever seen before. And
Isn't that cool, by the way? Isn't that
cool.
brilliant? We should celebrate that.
And I
At the
think
end
there's
of a
some other
pandemic year, we were able to say that.
Your 10,000 summer party is getting nearer, right? And I think as well, I think, again, my own personal, there'll be money kicking around, right? If we end up at negative interest rates, you know, nobody is ever going to want money in a bank because it's costing you that way, right?
Yeah.
And so they will be looking for more value, and fintech, and particularly the payments part of fintech is something where there probably is value. I think what worries me is that there are a number of things that we've learned that we want to hold on to. I think the way that we work remotely, the immediacy of work is something that, you know, in the past we'd all be traveling, or we could do that in a couple of weeks, let's get together. No, we'll do it tonight, or we'll do it this afternoon. Now, the balance to that though is I can't really think about a time when I've stopped working since about February of last year, really. Any day, right? I had 2 days off this week and it felt like 2 days of work. No criticism of MasterCard, it just is that. So we have to get back to understanding, and I think one way of doing that is physically going somewhere else, right? Getting on a plane, or you do feel like you've got away a bit more unless you're working in your own house. But there are things that I want to open a debate with many of our customers around, you know, do we really need to physically meet so often? You know, can we do little and often, but in remote ways? The amount of things we've got done, and we wouldn't want to have learnt it this way, but the amount of things we've got done and the amount of people whose opinion has changed towards more flexible working is something I think we've really got to hold on to. If there are some things that we can make out of this crisis, I think for me that would be one of them, as I think about having a young family and seeing them more. But we've got to get that balance right, because if our customers, many of whom, you know, the way they work is like that, it's going to be hard to sort of meet in the middle somewhere.
Very good. So I think we all have comments on that, but I would love to, unless anybody wants to jump in quickly on something, I've got some questions to go from the floor. Anybody has a comment to make, building on Scott's comment?
I think just to tie it to a comment that we were discussing earlier on in the conversation about how you choose partnerships, or how do you choose new relationships, and how it actually links to people much more than being sort of the RFP transactional based on sort of price and all this kind of thing. There's still an enormous value in having that opportunity to build those relations. So I think what we've done really effectively, you know, in the past year is maintaining and building on the partnerships that we have. But in terms of that sort of the creating the new relationships from a proper partnership perspective, there's still nothing beats that face-to-face piece.
Well, that's a huge relief for me, because it means bring back the business lunch. That's what I want. 5 days a week, 12 till 3. Well, we're just out to lunch. That's what it's got to be. So look, so thank you, Joanne. So look, let me go to a question here that's come from Mike Hyam. Thank you, Mike. And it's specifically to do with the increasing prevalence of mobile devices. Although the question is not specifically about partnering, I think it's a good one. There's something here about, let me just read it out. To protect enterprises and end users from fraudsters, by the way, we all know fraud is one of the big threats, big concerns to our industries. To protect enterprises and end users from fraudsters, is there a case to use the attributes held by the mobile network operators to verify that the device being used has not been compromised by bad actors? Would anybody like to comment on that?
Yeah, I can comment a little bit on that. I mean, there's a lot of different ways to make sure an account hasn't been taken over. Everything from, you know, the biometrics of your body, you know, how you hold the phone, and if the phone's trembling, and your hand trembles when you hold the phone, by the way, and you can measure that. And if somebody else is holding it, or even how you type things in, your typing method is different from one person to another. Those are just one of a multiple of examples of how you could use biometrics, or you could use other third parties to make sure that that you're eliminating or reducing the possibility of fraudsters. We use a variety of methods because we are a mobile only offering. So we use a variety of methods to try to find the bad guys.
Very good. I like that as an answer. We've also got a question from Nurit Schmidt here. So how do we ensure that your targeted return on investment on your innovative product will be met if you're innovating and bringing new technologies and investing without really knowing how it will be adopted? In other words, how do you de-risk some of these new and exciting things we're investing in when we really don't know whether they're going to work or not?
So I'll take that one if you like, Tony.
Sure.
So obviously entering into any engagement with anyone has a level of risk involved in it. And I think it would be, to a certain extent, it's actually quite naive to assume or sort of blanket cover all of fintech partnerships with they are inherently risky. So I think every single one of those partners needs to be looked at for the shape of their business, what risk they bring, and actually in terms of really getting that balance in terms of risk and reward. Also another, I suppose, mechanism or lever that is there is to take an even more proactive role in the development and the maturity of that fintech by really launching your own ventures arm. And NatWest have been in the venture space for a number of years, but also looking at that collaboration through seed, collaborate and build is also another way to look at how you bring maturity and actually de-risk that fintech market in itself. So I think there's a number of levers. It's quite kind of complex problem, but I think you need to look at the individual partnership. You need to assess it on that risk and reward basis. And also you need to look at in really exploring those strategic partnerships, how do you help the fintech market de-risk itself, whether that's bringing to bear that wisdom around regulation and compliance, whether it is really bringing a business or a market maturity model to bear within the fabric of that fintech partnership. There's so many facets to that.
No, I think that's great, but in a way, that's one of the things I've seen. That, certainly MasterCard, occasionally you'll support some people in the ecosystem that are coming to you with great ideas that maybe don't have deep pockets. Is that something that we think we might see from the banks as well? Do you think, Kira?
Sorry, Tony?
So do you think you might see banks getting an approach from a fintech who said, look, I've got this great idea and I've got these superbly talented people and maybe some superb experience, but I just don't have deep enough pockets. And the market, rather than me spending a year going through the process of doing a seed round, maybe NatWest can throw a few £100,000 into the pot to help us out through an NPV, for example.
Yeah. Well, I mean, I think the art of this is any business manages risk rather than eliminating it. I wouldn't rule out of them. At the end of the day, all of the partnerships or those fintechs relationships that come to us are all different shapes and sizes. So whether it's that example of, five guys in a garage, whether it's another example of something that's at a different level of maturity, really depends on the nature of our approach. So do we look at it as a ventures type relationship? So is it seed, incubate, grow with them, help them grow? Is it actually entering into a partnership which is more mature and has longevity? Is it looking at it as a proof of concept type partnership and then seeing where things go? So there's so many facets and natures of relationships that we can enter into. And it's really understanding the right fit and really how we get the right balance of risk and reward.
Nice.
And Tony, I think it's important to, certainly from NatWest's perspective, of course, Alison Rose recently announced, I think it's £1 billion sterling, right, of female entrepreneurial support, not just for fintech, but just in general. So I think it's fair to say NatWest are doing their bit as we come out of this, hopefully come out of this pandemic. I think that the one thing it's hard to, you're never going to be able to guarantee a return on investment. What you can do, though, is by spreading your risk through deep and effective partnerships, you get more people in the game, right? And I think It does come back to this whole conversation. When I'm proud, we took a strategic decision before I was doing this job, so probably 4 or 5 years ago, that we would welcome as many businesses as we possibly could into the ecosystem, even if they were working through other partners such as GPS. You know, we had a very strict, if you're not a licensee of MasterCard, you don't, I wouldn't say you don't exist, but, you know, we wouldn't engage with you. If that wasn't the case, we wouldn't have met Revolut when there was 4 or 5 of them, right? And et cetera, et cetera. And we made a very conscious decision. And that has, I believe, paid real dividends for us. And it's not just in fintech. We do the same with PSPs and other areas. All of these merchants, these areas that aren't actually directly licensees of us, I think we're much more open to meeting, discussing and partnering with them than we used to be. And that's the best way of managing your risk to some extent and hopefully getting a better outcome.
Yeah.
Vikesh?
Sorry.
Vikesh, your thoughts on that?
Yeah, I was just going to say, you know, maybe just to bring a perspective from Swift, right? So being a member-owned cooperative, right? And I think the question was really interesting because it talked about adoption. So where you financially can't, you know, build your models to clearly articulate or see what the ROI is and track it. And even as Scott was talking about and Kira around how you de-risk that potentially, adoption of your end product is important. So, and we're talking about collaboration here. So if you collaborate with your clients, you bring them into the governance, you bring them into the decision-making where it's appropriate, you certainly bring them into the sprints, you have a coalition of the willing, and your confidence increases around the adoption and usage of what you're building on the other side. That's another way to try and then measure return on investment, i.e. if I have 5, 6, 1,000 different end clients using this, and if I predict volumes are going to be here, you can have different financial measures that can kind of build a different return on investment case.
Yeah, nice, very nice.
Tony, the other aspect I was going to say in terms of support of fintechs, you talk about sort of investment in the fintechs in terms of cash. Actually, what both ourselves and MasterCard have been really strong at is creating the appropriate commercial models that allow for a ramp such that you can have a small start with a lower financial commit and then build over time. So, I mean, that's exactly how, you know, we got up and running with Revolut when it was just Nikolai and Vlad. Actually, you know, the minimal level of, monthly commit was actually really, really important to them. You know, same with starting off with Shahar and the Curve team. You know, that's the way in which organizations such as ourselves support those fintech startups, just through, you know, recognition and understanding on the ramps. Unfortunately, you know, in order to be able to do that, and I'm sure Scott will recognize this as well, you have to kiss a lot of frogs. Because not every fintech's going to be successful. There are, you know, there are a number of that sort of fall down by the wayside for various different reasons. But, you know, that doesn't stop us from believing very strongly that that is an important, you know, very important community that we will continue to support on an ongoing basis.
Very good. So what I'm going to do now, we're going to leave just a few minutes at the end for your top tips on how to enable good collaboration and partnerships. But I want to spend just a few minutes, just 3 or 4 minutes, talking a bit about open banking. We've had a couple of questions on that. One from Paul Lovetrees. Thank you, Paul, for your question. One from Roger Carrico. And so thanks for that. It's really to do with the extent to which now we're going to be seeing more software as a service and more open APIs. Do you think that's going to change the approach in our industry to more tightly coupled partnerships? And I think Paul means, do you think we're going to see more of them? But he might be saying, do we think we're going to be seeing less? So Natalie, what do you think in the open banking enabled world?
We've just enabled open banking for the UK and working on Europe. It's definitely something that we want to take advantage of. So, you know, I'm really supportive of opening things up. I mean, that's all that Curve's proposition is about, right? We are here to rebundle your finances. There have been some amazing fintechs that have come out, and so it's been a bit disaggregated, and now we know that people want to see that coming back together. People do have multiple bank relationships, by the way, so it does make sense that they might want to see that all in one place. So yeah, I do think that that's going to lead to more collaboration and more tightly held collaboration, because you don't want to do that. If you want to do something new and innovative, you don't want to just do the bog standard what's available at the government level. You want to build off of that. So I do think that that's going to change some partnerships for those that are embracing it.
And what about from your point of view, Kira?
Sorry, Tony, you're cracking up. Give me that again.
Sorry. What from your perspective, in terms of whether open banking is going to enable more and encourage more partnerships, or whether it's going to mean the opposite?
Oh, I think it will enable more partnerships. I think the very nature of it. I think the wrong way to look at open banking is as a threat. I think it's a massive opportunity and a massive window of opportunity for those style of partnerships. And it's definitely something that really over the last few years in NatWest, we've seen really come to life. And I don't think that will change. I think it's very complementary to the partnership approach. And
in fact, Roger Carrico in the audience also comments on how the pilot that NatWest and RBS did with regarding payment biometric cards is a great example of collaboration with different people across the ecosystem. Very good, thank you.
So Tony, just a quick reflection on the question, because actually there was a really insightful point in there, which was, I think open banking is going to help, but that kind of everything as a service, it's a really powerful thing, right? So our experience or the way we've seen development is, initially a few years ago, most of the collaboration was in that B2C space, and it really has shifted into B2B noticeably.
Yes.
And the question says, this principle or concept of everything as a service, I've got no doubt, I think that it will open up more opportunities. It will have tighter partnerships, and it will mean that platforms, and we at Swift, platforms like Swift, see increasing collaboration and opportunities just kind of exponentially growing in the years ahead.
Very good.
Yeah, sorry to cut in again, but genuinely, I believe those partnerships, so again, the buy, sell and the competition of payments, we also need to understand the other dimension of payments. So payments is a connected, networked industry. We are all performing a service that is as important as operating as part of society. I genuinely believe that engagement with organisations like emerging payments, this is exactly where we all win. When UK PLC wins when we all work together, and I think open banking is a prime example of this. But I think this whole conversation shows really the power in that, and the power in us engaging as an industry and engaging in partners in meaningful ways.
Completely agree. And I think we're going to see coming out tomorrow in the FinTech review from Ron Khalifa, Innovate Finance, following the Rishi Sunak request last year. Let's see what comes out from that, but I'm hoping it's a good backdrop for this conversation. Right, we're going to move on, last 2 or 3 minutes, and we're going to have top tips for enabling collaboration. And we're going to finish with Joe, and we're going to start with Scott. You've got 15 seconds each. Top tip. Scott.
10 of those getting me off mute, Tony. Apologies. My top tip would be the thing I started at the start. Take time to understand each other's people, each other's business, each other's goals. If you get those aligned, or at least understand each of them at the start, that's a great foundation to build a partnership on.
Very good, very good. Natalie, top tip.
I would go with, to add to that, flexibility and agility. Really important.
Flexibility and agility, understanding. Very good, Vikesh.
So yeah, I'm not going to repeat what my colleagues have said. I'm just going to say it's a cool time to be a payments geek.
Yes, it sure is. So here's to the next payment geek, Kira. Well, what are your top tips?
Yeah, absolutely. It's a great time to be a payments geek. I think keep an open mind. Look at all of those relationships and all of those partnerships with an open mind, move past your own cognitive dissonance, and look at the opportunities and the exciting opportunities that are in front of you.
Keep your eyes open. Very good. And Joe, you have the honour, lucky you to be the closing remarks. Your top tip, and you've got to look at this. You've got a couple of minutes because the other has been so quick.
I think the fundamental for me is partnership is a two-way street. So make sure that you're, listening as much as telling. There's a huge amount of knowledge and experience on the other side of the partnership that can be absorbed, and then it becomes about much more than how much you can squeeze in terms of value for money. The partners need to be viable businesses as well. So I think that whole partnership is, as any relationship, is a proper two-way involvement, and the best partnerships are those that really recognize that.
Very good. Thank you. In a funny way, I love your street analogy. I also think there's a little bit of a market square here. And I feel as if the six of us have been together in the market square, having a good old chat over a cup of cappuccino, who knows, on the Amalfi coast or on the Marbella coast. Who knows where
Natalie's chalet.
Natalie, come to my chalet. We'll get in the hot tub.
Chalet. Don't forget, we have the most exciting, vibrant, multi-stall event taking place in a couple of weeks at Pay 360. It's going to be the biggest, best and most exciting event of the year, I reckon. And so please do all make sure you're signed up to that. You'll be hearing, I'm sure, from some of the people on the panel here today, and 50 plus other people to share their words of wisdom. So thank you very much indeed to the audience. Thank you for the great questions. To the panelists, thank you very much indeed. And here's to more and effective partnering. Thank you very much, everyone.
Thank you.
Thank you, Tony.
Thank you.
Thank you, Tony, and thank to all of our speakers and for everyone attending today's webinar. If you have any questions, please contact amy.page@emergentpayments.org. You will shortly be receiving a survey on the webinar, and we will appreciate if you could complete this and provide your feedback. You will also receive a follow-up email within 24 to 48 hours with a link to view the recording of today's webinar. On behalf of the Emergent Payments Association, our speaker and GPS, thank you for joining us today and have a great day. Bye.